they're spending so much money, the government is, that inflation is going to have to be at some point just understood that it is going to be the only path that they can take next to default.
This is Kaiser Johnson, and this is the Miles Franklin Weekly Special for September 4th through September 11th, 2023, while supplies last. This week we feature 3 different specials: 1/10 Gold Eagles at $37.50 over melt, Kilo Silver Valcambi bars at $1.99 over spot per ounce, and your choice 1-ounce silver rounds at just $2.50 over spot. The Gold Eagle was first released in 1986 and has been one of the most popular gold bullion coins in the world, providing incredible recognizability and investor trust. The 1/10 Eagle is additionally sought after for its high degree of flexibility and liquidity. Like the 1-ounce Eagle, the 1/10 Eagle is 22-karat gold strengthened with copper. It's 1/10 of a troy ounce of gold, comes 50 to a tube, 5,000 to a box, and is available at just $37.50 over melt while supplies last. Finally, the Gold Eagle is IRA eligible. Next, from Valcambi, a Swiss mint known for producing some of the highest quality products in precious metals, we have Kilo Silver bars, which are 32.15 troy ounces of 3/9 fine silver, cast with individual serial numbers and a beautiful antique-style finish. They are only $1.99 over spot per ounce. They come 15 to a box and are IRA eligible. And for your choice silver rounds, you may choose between the iconic Silver Buffalo round made by various private mints across the US and the Silver Asahi round from Japan. Both 3/9 fine, both 20 to a tube. The Asahi rounds are also IRA eligible. And if you'd like to learn more about a precious metals IRA, call us, and we'll be happy to help you in that process. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Welcome back to Liberty and Finance. We're always glad to have this returning guest with us for our weekly market updates every Tuesday. Andy Schectman is the CEO of Miles Franklin Precious Metals. He's joining us this Tuesday, September 5th, 2023. Andy, thanks for coming back on Liberty and Finance.
Good to see you, Dunnigan. You're still looking tough. Look like you defended your wife's honor like we talked about last week. It's good to see you again. Hope you had a nice long weekend.
We did, yeah. We actually played some more pickleball. Actually wore ourselves out 3.5 hours, and so we actually took Monday off because we were going to go back Monday and do it again. We just thought, we're just too achy. Hey, there's an old joke. How do you know you're a grown-up?
I can't wait to hear this one. I'm not sure.
You know you're a grown-up because you groan when you get up.
Yeah, so. Tell me about it. My wife says to me, my goodness, you make such crazy noises. I'm like, what are you talking about? I don't know. Evidently I make, you get up, get down. Yeah. Believe me, I played sports my whole life, and I'm still paying the price for it. My shoulder, my knee, my back, but whatever. That's a price you pay for having fun as a kid. And I'm still a kid in my mind anyway, but to your point, I must be a grown-up because I'm definitely groaning when I get up.
Well, I guess it maybe relates a little bit to what we talk about here about kind of dealing with reality. We're all a kid in our mind until we realize that our body is several decades older than it was when we used to be able to just get it to ask it to do these things. And the same thing is we're living in a world and in a time, as you've reminded us, where we're 4 decades into this expansion of credit and artificially low interest rates and easy money and all that sort of thing, and the effects that has had on the stock market, the bond market, the real estate market, et cetera. So we're all kind of living in a delusion of how the way things used to be. And that's not a good playbook to take forward into the next decade, I believe, based on all of the people that we've interviewed on this channel who are very well connected and doing a lot of research on the major shifts that are going on in our world. So that's probably a good tie-in to say, this ain't the world it used to be. That ain't the dollar it used to be. And the banks aren't what they used to be, et cetera. Or maybe they're too much like they were when our country broke away from England, et cetera. And now we're back in bed with them again. So wanting an update from you, if you would, on your latest research that people should be aware of, major trends they should be keeping an eye on, and then if we can get around to a weekly special afterwards, that would be awesome.
Sure. Every week I comment to you on how amazed I am that the number of stories to talk about continues to accelerate at such a voracious pace. That really, to me, is part of the what concerns me more than anything is that, this is becoming part and parcel of the daily fabric of our lives, where things that would have knocked you off your chair now are just, oh, another one of these moments. And so, we'll go through and talk about a few of them. We can start with, some of the innocuous ones, such as yesterday, Monday, Labor Day, wasn't Labor Day in China and Japan, obviously, but what it was in China and Japan, those being the second and third largest economies of the world, is that gold hit all-time highs in their respective currencies on Monday. It goes to show you the inordinate and perhaps unjustified strength of the U.S. dollar, which blurs the real value of gold and silver in just about every other currency. We talked last week about that chart, and I forgot the exact name of it, but the chart that shows gold valued in the top 20 economies of the world. Again, roaring to new highs. So it's the value of the dollar that is somewhat making gold's value opaque. You can't quite see it because you're measuring it against dollars, but the rest of the world sees it. Obviously, we'll talk a little bit about BRICS, and as it continues to, again, accentuate and grow, and every little day, little nuances. And, thinking about what BRICS is to me, it's a system that's based around regional relationships and maybe even military power. But the initial motivating factor against all of this is pushback against the Western nations, against the Western hegemony. And you're beginning to see it more and more and more with really China forming these mutually beneficial alliances and acting as a partner rather than an adversary. And you see that no more clearly than it was just announced that Xi Jinping and the president of India, Modi, stepped aside at the meeting and promised to accelerate the peace plans or the problems they have with Kashmir, and that they want to make this problem go away, to de-escalate the situation. And so when you're seeing these countries who have been at each other's throats for years and years and years and years, finding ways to work things out in a diplomatic way, a mutually beneficial way, is adding, I think, credibility to a group of countries that is being largely, I think, ignored by the mainstream here in this country. You look at something like Iran as an example. Within the span of 1 year, Iran, who supposedly is suffering under the Western sanctions, has been fully admitted into the BRICS nations, as we know, and also a full member of the Shanghai Cooperation Organization, the largest financial and military organization on the planet. I do not think Iran will have problems sidestepping these sanctions in order to develop, in fact, certainly be incentivized to develop alternatives in trade with all of these other countries that they are now joined with. And you can see that, things are starting to change all over the place, not just with Iran. Look at Saudi Arabia. Their oil exports to us, done again, are at their lowest level in 6 years, as is their holdings of treasuries, which the kingdom has been selling their treasuries now, and it's at a 6-year low. So you have Saudi Arabia and China dumping bonds, in essence, while striking deals outside the dollar, which is huge. And when you talk about Saudi Arabia, Iran, and the United Arab Emirates, you got your major oil producers. When you talk about Argentina, who was just admitted to the BRICS, you have a major agricultural producer. But I think what most people don't know is that they're also the largest natural gas producer in all of South America. You have Egypt, who controls the Suez Canal, which is a huge major shipping route. And then you have Ethiopia, which is the fastest growing country in all of Africa. Now, the majority of the African countries want to join BRICS, and I think you will see this more and more and more and more. In fact, a total of 23 countries have already formally submitted their applications for BRICS, the next BRICS meeting. Call it BRICS 2. And then another 22 have expressed interest. In total, you have over 50 countries that are either fully expressing interest or formally submitting an application and or expressing interest. And this is no small organization, as we've talked about. A lot of people have talked about how you're going to have 46% of the global population and 45% of the oil production. But also we have 75% of the manganese, 50% of the globe's graphite, 28% of nickel, 10% of copper, two of the three largest nuclear arsenals in the world. You are talking about a group that is formidable and is self-sufficient amongst trading with themselves in the world's commodities that are becoming so very, very, very important. Rumors are also that formal requests have already been made by Algeria, Cuba, Indonesia, Palestine, and Vietnam. Other notable countries expressing interest, as we've talked about, Mexico and Venezuela. A lot of these countries that are joining are very, very rich in natural resources, and that is certainly one of the very glaring traits of the expansion is the countries they are bringing on board are very, very rich in natural resources. Recently, we found that Moscow and Tehran are working on the use of a gold-backed Persian Gulf token stablecoin. I mean, talk about a knife to the side of the petrodollar. You know, you talk about making a gold token that is for specifically for the Persian Gulf for oil settlement. Here again, little by little by little by little, the erosion of settlement in the dollar will greatly at some point affect the reserve status of the United States dollar. And people who poo-poo this, well, you know, they're right today, I guess, to a degree. But every single day, it's the little by little by little until they will wind up blindsided by what they don't see coming or what they refuse to see coming. One of the things that I've talked a lot about is the Shanghai Cooperation Organization and the Eurasian Economic Union. And I want to really hammer this home. You know, James Rickards said two things. Neither of them came true, but I think he was right in both of them. James' mistake was saying was going to happen at the meeting on August 22nd. I don't think you should ever do that. Speak in terms of probabilities, not uncertainties. The probability of what he said is going to happen. I do believe you will see a gold-backed settlement currency by the BRICS, maybe next year. As we know, their finance ministers were tasked with going back to the drawing board and presenting their findings on a settlement currency pegged to commodities in the next meeting. But another thing he talked about was the union of the Shanghai Cooperation Organization and the Eurasian Economic Union. Now, I've mentioned those two entities in just about every interview I've done with the BRICS in the last 3.5 years because of the commingling or intertwining of the countries within these organizations. Between the Belt Road, the Shanghai Cooperation Organization, the Eurasian Economic Union, and BRICS, you have many of the members that are members jointly of several of these unions, these groups. And so Belarus is now proposing to hold a joint summit between what they now call the BRICS 11, the new 11 countries that are now formally in BRICS, with the Shanghai Cooperation Organization and the Eurasian Economic Union in order to speak of the convergence of these multilateral organizations. And in other words, what you're going to see is they're all going to join together. It is going to happen. Now, James said that would happen August 22nd. It didn't. And I, if anything, feel bad that, if anything, I hope his credibility didn't take a hit because what he's saying is going to happen. But it's important, I think, and he's probably a lot wiser than I am, but from where I sit, we live in a world of probabilities. There are no guarantees, but I would say it is highly probable he will be proven right in the end, the timing a little bit wrong. Again, I mentioned how Xi Jinping and Prime Minister Modi have discussed meeting for disengagement and de-escalation meetings. That's one of the big pushbacks I get from people, at least the people who maybe even who are commentators in the space, YouTube commentators. Well, what about China and India? They don't like each other. And, well, you can see my enemy's enemy is my friend, the greater good. And, I think this is coming where you're going to see these countries reconcile, just like Iran and Saudi Arabia, like Iran and Iraq, like these countries that are putting aside their differences. Couple of quick things to talk about regarding, there's one other piece I guess we could talk about. Kristalina Georgieva She was dispatched out to China just last week after the meeting, after Xi Jinping talked about breaking free of the Western settlement, changing the international financial order of things, using local currencies. And everyone thought she was off to, throw a wrench in that. She just was quoted as saying that trade in local currencies can aid emerging economies in becoming more stable and international. This is the managing director of the IMF. This is a big deal. Are they acquiescing to this ultimate reality? Do they know that they can't stop it? I don't know. Last piece we'll talk about is the consumer. As you mentioned, you have excess household savings have fallen for 22 straight months. And, that's been falling by $100 billion a month. And at the end of 2021, the Americans had over 2.1 trillion in excess savings, thanks to all the stimulus that we were given. And current estimates put that at 190 billion rather. So, I mean, it's getting the savings is getting obliterated with inflation as people are trying to keep their head above water. And, at the same time, we have the government getting deeper into debt and spending more while taxes are dropping. And, you're looking at a situation where they're spending so much money, the government is, that inflation is going to have to be at some point just understood that it is going to be the only path that they can take next to default. And as that happens, we have a very dangerous situation. Part of their ability that they've been able to do this is by attracting so much money into the overnight reverse repo market, which is paying about 5.3% backed by the Fed. But as the government continues to need to borrow money to finance because China and Saudi Arabia and Japan are selling bonds, who the hell is going to buy them? So what they have been doing is raising rates high enough, let's say close to 6%, to pull money or attract money out of the reverse repo market directly into the Treasury market from big players going right to the Treasury, like treasurydirect.gov. And so as you see the reverse repo market, the overnight reverse repo market drain, as rates directly at the Treasury are higher than what you can get there, we will realize that there's no one left to lend money to the Fed. They are using the liquidity in the overnight reverse repo market to fund their stupid, ridiculous, nonstop spending. And, the national debt has increased by 1.45 trillion in 3 months. I mean, it's just absolutely insanity. 33 trillion in the past 5 years. I mean, in the past 5 years, national debt has grown by over 53%. From 21.4 to 33 trillion. It's absolutely ridiculous. We are on an unstable path. And right now, it's the reverse repo market. Watch how fast it drains. When we get close to the end of it draining, and the Chinese and the Saudis and the Japanese and all these countries are not rushing to buy our treasuries anymore, things are going to get very interesting. And that's when we see more Federal Reserve monetizing, greater levels of inflation. So, look, put it all together, it's blurry, it's dizzying how many things we just talked about here in the span of 1 week. These are all the things that I've seen change in 1 week, and I'm missing a ton. We could talk for the next 3 hours about all the things that we see day by day by day, but if there hasn't ever been a ringing endorsement for gold and silver, not as an investment, but as wealth, I don't know if there ever has been. And I guess when it comes to the BRICS, people just need to stop being impatient. Do not fall into the instant gratification trap. See the big picture. See these pieces of the Jenga tower one by one everywhere you look coming out. Look at the linear decay. At some point, it falls off the cliff. Now, we're not there yet, but if by now you don't see this clearly, I think you're not looking at the right stuff. And with that, I'll stop rambling and entertain any questions if you have any.
Well, one more point I just wanted to underscore that you brought up there in passing. There was a lot there, but one thing was about the stimulus that was injected by the government into people's pockets and into the economy and so on in the form of stimulus to individuals, stimulus to businesses, etc. having worn off now, that drug has passed its half-life, and now inflation's eating that all up. One thing I wanted to underscore there as a major principle is that governments don't create wealth. They never have, and they never will. All they can do is pick from one person's pocket and shove it in another and keep some for themselves. And in this case, all of those stimulus dollars that were created out of thin air that caused that hockey stick in the national debt and the deficits and everything eroded and sucked the value out of all the rest of everyone's earnings and savings and retirements. So it's we don't have to wait for these things to wear off. We're doomed that they're going to hurt us when people say, I need a bailout. It's like, no, that doesn't help anybody or anything. It just causes the government to grow bigger and everyone to become more dependent on the government and less free. So that was just underscoring.
You know what it is? It's immoral, Don. Again, I mean, you know what gold is? Gold is proof of work. You had to dig the stuff out of the ground and then form it into a coin, and it's proof of work. But nowadays the Federal Reserve, their proof of work is pushing a button, creating money, buying bonds, and suppressing interest rates. And hopefully the banks, according to the Fed, actually lend that money out into the system. That's how money is created. But right now the banks don't even want to lend the money. So all the Fed is able to do is mess with interest rates. If no one is lending, which is how money is created because it's too fragile out here, they'd rather get 5.3% and with safety in a reserve account at the Fed than lend it to you and I. Things are starting to really break. And as you see the cost of money and the ability to have it lent to you becoming much more expensive and much more difficult, the ramifications of the banks and all of the problems that have not gone away will only grow. So you're right. All they do by doing that, it's immoral. It is to create money out of thin air when everyone else has to work for it. And to hold a piece of gold or silver in your hand is to show that someone somewhere worked to pull it out of the ground. And that is why it has real value, real wealth. And it's not immoral like a keystroke by a central banker who decides they want to affect monetary or fiscal policy.
As brokers, we continue to get increasing frequency of calls from couples or individuals who are selling properties and don't feel comfortable parking the proceeds of those real estate sales in the banks. They don't want their bank balances that high. They don't trust the stability of the banking system enough at this time to park that much of their nest egg there. They're seeking, as Rick Rule calls it, bullion liquidity in addition to cash liquidity. Can you talk to us about what specials you have this week to help people who do want to establish or increase their bullion liquidity if they would like to get some of their nest egg out of the stock market, out of the bond market, out of the real estate market, and into something that's going to be liquid down the road and maintain that proof of work, that proof of real value?
We have in silver, we have the Valcambi kilo. People remember that from the last couple of years. We sold a lot of them. I like them a lot. They're very affordable. They're very neat bars. They are stamped, serialized with certificates of authenticity that match the stamps or the bar numbers. They come in boxes of 15. They're fantastic. They're $1.99 an ounce over the price of silver. And on gold, we're doing the 2023 1/10 ounce gold eagle at $37.50 over melt. So for that one, you would take the price of gold, divide by 10, add $37.50, and there's your price. If I had to name one coin and only one coin that has always maintained its premium, buy or sell for 33 years that I've done this, hands down in 10 seconds, 1 second, it would be the 1/10 ounce gold eagle. It always has a high premium, buy or sell. They're made in very small quantities. They are the most flexible way of owning gold with great liquidity and no subjectivity. And the fact that, I want to clear one other thing up just to explain why I think they're the best form of barter for gold. A lot of people say to me, in fact, someone today said to me, you sold me those gold eagles and they're not pure gold. What's the deal? I said, yeah, they are pure gold. Now, I'm going to use the 1 ounce as an example, but divide by 10 and the same is true of the 10th. Okay. So the 1 ounce gold coin is 22 karat. And a lot of people will say, well, it's not 24 karat. What's the deal? You didn't sell me pure gold. It is pure gold. It has 1 ounce of pure 24 karat gold in it, straight up. But it also has a tenth of an ounce of alloy added to it that is primarily silver with a drip of copper in it. That tenth of an ounce increases the net weight of the coin to 1.1 ounce, decreases the purity from 24 to 22. It's irrelevant. You still have the same amount of gold in it. If you brought it to a refiner and they melted it down, you would have 1 ounce of pure 24 karat gold, plus roughly a tenth of an ounce of silver, a little sprinkling of copper. But that's to give it durability. And so if you were going to use the tenth or the quarter or the half ounce gold American Eagle to trade with, to barter with, you hold it in your hand. You could drop it on the ground. You could let someone jingle it in their hand with a few of them and nothing's going to happen. You could play poker with it and it would look brand new. You play poker with a whole bunch of gold buffaloes and maple leafs, by the end of the night, that pure 24 karat gold free from any alloy is going to look 100 years old. So it is pure gold. It's the best form of barter. It's always maintained its premium. It's a wonderful way to own gold. It is the most costly way to own gold bullion. But you always get that super, super high elevated premium even when you sell it back because of the demand, because of the supply-demand imbalance. Very few made, largely demanded, great utility. I'm a big fan of it. I've been accumulating them in large quantities for 33 years, and it's easier when you own a metals company, you can focus on something. But even if I didn't, I love them. And if money wasn't an object at all, I know it is for all of us, but if it weren't, it would be all I would own in gold bullion, because whether you're playing poker with your buddies or driving on a crowded highway or investing or living, you can never have too many outs, too many exits, or too many options, or too much liquidity. Price is a little bit steep, though, when you compare it to a 1 ounce coin, somewhere in the neighborhood of probably 15% lower on a 1 ounce coin. But hey, you want that utility and that flexibility. There is no better choice.
Yeah, the part that throws a lot of people in understanding the gold content of the American Gold Eagle, whether it's the 1 ounce, half ounce, quarter ounce, or 10th ounce, it's all the same issue all the way down the chain, is when they compare it to a coin made by either the U.S. Mint or a foreign mint that has only gold in it. They say, hey, how come the purity is higher on that foreign coin? And the point is, it has the same amount of gold. You're getting the same amount of gold, and you're getting some silver for free, and some copper for free.
Exactly, and that's just it. But what it really does is it gives it durability. And if you think about it, if you're going to barter with something, it would be better to be able to hold these things in your hand. And I'm telling you, you could hold 50 of those 10th ounce coins, about the size of a dime, shake them in your hand like popcorn, and they'll be fine. You do that with 1/10 ounce maple leafs, and they're going to look like crap. And that's why in those old movies and old westerns, you'd see a piece of gold given to the bartender and put it in his tooth and bite it. It's that soft where even your fingernail, if pushed hard enough, would leave an indentation, a scratch, a scrape. And you don't want to receive scratched or scraped coins if someone sells them back to us. So when you talk about utility, the 22 karat, even though you're not losing any gold, really comes out to be a benefit in terms of its durability and its ability to be used as legal tender in some of these states that are allowing it, and or heaven forbid there comes a period of time where we go Mad Max for a little while and have to use this stuff to transact. If that really were the case, you'll be glad you have something, and this is as good as it gets in gold.
Right, in terms of the most recognized, most trusted, and therefore the most liquid. That's what I talk to people about a lot, because when we interviewed James Rawls from survivalblog.com on here, he talks about how we're living in the age of deception and betrayal. We talked to Bill Holter just last week. He talks about how if things get tough, people are going to only be willing to accept in trade for real things like food and fuel and repairs and rides and everything, something that's real and that they could trust and that they know it's real. So in an era of reduced trust, you want the thing that's the most trusted. So at least you want some of it. You don't want to be without it. You don't have to have, as you pointed out in the past, you don't have to have your entire stack built out of just that product, but you want to make sure you have enough of it that you're not caught in a situation where you don't have the resource you need that the other person's going to recognize, respect, trust, and have it be liquid. There's an old saying, As a retailer, if you don't have the product that the customer is looking for, you don't have anything. And I would say, as a preparedness person who wants to be able to be prepared to barter, if you don't have what the other guy trusts, you don't have anything.
Yeah, that's even more important, because one thing is running a business, the other thing is protecting your rear end or taking care of your family. So, yeah, I'm a big believer in them. I love them, and I don't know. I think to a degree, at least to get some of them, the higher premium is justified. And remember, we pay very, very high buyback premiums on them, way, way, way higher than a 1 ounce gold American Eagle. So, what goes around comes around. And so I appreciate the time today, Dunnigan, and the world's getting crazier. I know we'll have lots to talk about next week as well. I wish you and everyone else out there a great rest of the week. And as always, I look forward to picking up where we left off, my man, but thank you.
Thanks for joining us, Andy. Always appreciate it. Take care.
Miles Franklin Precious Metals is one of America's oldest and most trusted bullion dealers. Miles Franklin is A+ rated and accredited by the Better Business Bureau, licensed and bonded, and has 0 complaints ever registered. Here at Liberty and Finance, we are licensed brokers with Miles Franklin. To order, simply call us, discuss your needs, and we can let you know our live inventory, prices, and availability, and lock in your order over the phone. Once your order is locked, the price is held for you regardless of market fluctuations, and the metals are reserved for you awaiting your settled payment. Within 1 business day of ordering, you will receive an email invoice detailing the order and payment instructions. Miles Franklin accepts payments by bank wire, ACH or electronic check, money order, check mailed priority mail, and cryptocurrency. The fastest forms of payment are bank wire and cryptocurrency. Upon settled payment, metals will ship out within 3 to 5 business days. You will receive tracking information via email. Domestic shipping charges are $15 for any order under 500 ounces of silver or 10 ounces of gold. For orders larger than that, domestic shipping is free. The package will be boxed, fully insured, and labeled discreetly, with no indication of the contents inside. For your privacy, the name Miles Franklin will not even be on the package. To talk to myself, Kaiser, my brother Elijah, or my father Dunnigan, call 1-888-81-LIBERTY. That's 1-888-815-4237.